I'd like to introduce you all to this market situation called a low volume rally. I'm not sure if you've heard of it, but a low volume rally is where the market rallies in low volume. And we are in that situation. So, what does that mean? Welcome to Altcoin Buzz Trading. I'm Brandy. Today we're talking about Bitcoin. Also have our two hot coins of the day, Pepe and Near Protocol. A low volume rally is not a bullish situation, it's actually a bearish situation. Typically happens after the market is turned bearish. Okay, doesn't mean that we're going to crash 95%, but it does mean that the uptrend in the market has paused or is completely over. I think we've just paused. And then a low volume rally, or those rallies in between where we go up and then fail at some point and roll over. So this is a low volume rally. It is possible to make money in a low volume rally. However, it's more difficult. It's not the same trading environment as a traditional rally where we go up, form a base, go up 30, 40, 50%, form a base, do it again, do it again. Um, a low volume rally is where we rally insubstantially. We rally here 10, 11%. We rally here maybe 8, 9%. Since we just come out of lows out of this, maybe we'll rally up back towards the top. But that's maybe about 9% at best. But that's not guaranteed. We're not guaranteed to go up and slap the top of the pattern and then roll over. We can really roll over in any time. So low volume rallies are difficult to trade depending on how long you've been in the markets and your exposure to these situations. You may or may not know how to handle them, but really the signature to them, as the name implies, is low volume. Now, this is early on Monday, so the volume could increase, but so far we're pretty low volume with maybe 11 hours left to go in the day. Look at our volume. It's akin with yesterday's volume. And you can see Monday's volume here was pretty normal and elevated. Monday's volume here was higher. So this does definitely look like and meet criteria for a low volume rally. So that essentially means that any trades that are being put on at this particular point in time, on average, for most people, are going to be mediocre at best, will likely result in some paper gains. But then once you try to realize those gains or think about taking profits, the market rolls over on you. So you need to have a more of a systematic way of exiting. Even before the market looks bad in some cases, it is best to wait until, say, trend lines break or our size get high or whatever your key selling indicator is. But for me right now with BTC at least, it would probably be this trend line. Give up some of this wick right here, but just try to stay with the trend. We did break up from here, so I think using that as an anchor point is a good decision. And rallying, if we rally up, take it out down here. What is it? 67.7. Say you bought right here, then you can walk away with your 3% and have a good day. But it'll be a hard fought 3%. So if you want to trade that, that's great. If you don't, that's also great. All right, let's take a look at these hot coins and what they're doing today. These are the two top, these are the coins top 50 market cap with large percentage gains. Pepe here with a snapback, not extreme low volume, but it's not really high volume either. And this is getting back to what I call a breakdown point. Breakdown points are pretty easy to spot. You look for the big cascade lower, find where it starts, and draw a line. That's your breakdown point. So there's your breakdown point, getting up to that level. Not a lot of ways to go. However, also rising in somewhat low volume. Although we are at average volume halfway through the day, so that's not too bad. But you can see the trend here is definitely down, and very likely to stall once we get up towards these confluence of signals up here. So breakdown points are really where resistance is coming heavy, and that's what happened here. Resistance, boom, took us down. So as we go back up and hit that resistance again, it's likely those sellers resume. It's just kind of the way things tend to work. So, and near protocol, you're going to find kind of a similar situation here, although we've a little bit exceeded the breakdown point, but not the high before the breakdown point, which I found has also been a point of resistance. This also coinciding with a declining trend line break as well. So even the bullish things have bearish tinges to them. So we'll see how this plays out. Oftentimes what happens, if we do get bullish in the next couple of months, we'll hit these breakdown points, we'll hit these trend lines, we'll come in, and then we'll chop around for a bit, do some things, and then we'll try to go higher later. But that's later. Today's today. All right, guys, that's all I got for you today. Stay safe out there. Low volume rallies can be a little profitable, but just be careful. trading them because they're not really extremely profitable situations. Take profits very quickly in this market environment. All right, guys, have a great day. I'll see you tomorrow on Altcoin Buzz Trading.